Hey, what's up everyone? Trader Tim here from EminiMind. It is the 13th of January, 2022, and yeah, the first 2 weeks of the year are hard, and that's why I find it beneficial to kind of ease your way into the new year. I had my first retracement trade today of the new year, and yesterday a couple of setups, but nothing triggered, and I also have some puts on. So let's just kind of dive right in and talk about. Let's start with the ES intraday, and then I'll zoom out to the hedge. So today, starting as an inside day, meaning let me go to a 15. It'll be a little easier to see. The range at the open was inside of yesterday's range. So this is yesterday's trading activity, and the trading this morning was inside of yesterday's range as well. We did have a kind of a nice inverted hammer-ish candle on the daily chart yesterday. Actually, no, not on the ES. We just had this spinning top, excuse me. So the open and the close were near each other with these longer tails, and that is tends to be a sign of a possible reversal if we can break down below the low of that candle. So you're essentially breaking below the low of the high bar. So today, as we opened up, we were above yesterday's close, not by much. So we had this little gap up, but I made a note that here was the close of yesterday, 47.2150. And when we came down and filled that gap, we actually came close to it. Um, and well, let me back up a little bit. Here is the first half hour's worth of trade. Really did not go anywhere, just moving sideways. And so this gray line, 47.25, is, well, actually it's 47.24.75. That was the bottom of the first 30-minute range, and then the second gray line down here at 21.50 is the gap fill. So when we broke below the first 30-minute range, what I like to do, even if we're in um, a range like we were here this morning, even if we're in a range, it's helpful to come in here and draw up the retracements that are occurring, just to kind of give you an idea of, okay, are we uh, gaining momentum to the upside or the downside? We had a bit of a triangle here, and then this inverted hammer candle kind of initiated the selling. And so we had a couple of shorts going lower here, another one, and then as we approached, okay, the bottom of the first 30-minute range, we did break down here, and this one, it looks better in hindsight. What ended up happening on this one is I tried to short here when so I had my anchor point here, moved it to the next candle, put a 24 or a 47.2450 out. It touched, it moved lower. I deleted my order, and then kind of right as I was adjusting my drawing like this, we traded up at 24.50. So I had deleted my order already, and then we rolled over again. And so being here, coming down and touching, we made it to a 22.50, and the gap fill was a 21.50. So I didn't want to short at that point because a lot of times when we come within a point, that's usually close is close enough. So if we were going to bounce, we could have likely done it from there and moved higher. So I waited till we filled the gap entirely, or in this case, I was really waiting for us to break a swing high and possibly go long. But we didn't. So at that point, we came down, filled the gap, went through the gap. We had a low tick that lined up with lows. A lot of little kind of subtleties today, but the more you watch and trade, the more you pick up on a lot of this stuff, and it can be a helpful way to be able to filter out some trades. So we had a low tick at 810 and a low nicey tick at 810. A low nicey tick and a low price, both at 810. When we moved lower, we had a tick divergence, which means this is not the low of the day, and we likely could continue to make new lows. And so that's where I ended up placing my short. And so I used 47.20 as my entry. And this one was pretty sloppy. We traded in about a point and a half, and we came down here and made this double bottom, but then came back up to the 50 and rolled over. I left my stop alone on this one rather than tightening it on the double bottom, just because I felt like things were a little bit sloppy. We traded into the 61.8, and I just didn't really see the need there to micromanage it, and it's kind of my first trade of the year, so I was just going to kind of let it do its thing. And we rolled over a little bit, got a bounce. I drew up the next retracement. Technically you could also draw up an extension, but I just like to draw the next traditional retracement when I'm trailing my stop on these 512 ticks. And then from there you can just start trailing the swing highs. Here we had a one candle swing high. I went ahead and used that as the trail stop point, just putting my stop one tick above it, 47.15. So got the 3-point first target, and then another, it was like 5 points I think on the second half. So, and then that was the end of that trade. And then from there we kind of went sideways again for a little while, and that took us to the end of the session. So didn't do a whole lot until later here in the kind of late lunch into the afternoon, and now we're selling off pretty good. So on Tuesday, coincidentally, we talked about putting on a hedge if the market bounces, and I used the reference of if the market comes up and trades around anywhere. So in the example, I said if the market comes up and trades around 470, I'd like to put on a hedge because if we roll over, we have this 50% long that we could likely trade at again. And lo and behold, we traded right at 470. I forgot to set my alarm on Tuesday, so I did not end up putting on the trade on Tuesday. I ended up putting it on Wednesday at the close. And my thought there was we've came up to the underside of this trend line, and there's still a lot of uncertainty here in the broader market, and we closed basically right at the 61.8. So I was okay putting on the position there. So I did the 470s at what did I use? Next Friday, the 21st, as my expiration. So 470s, the 21st. I just right before I recorded the video, about 20 minutes till the till the close, I sold a little chunk off just to kind of start the year on a positive note with the hedge, and then I'll just hang on to the remainder. Hopefully we can get down somewhere around this 450 area. That would be a nice swift move lower. So I did buy a little bit of my VUG long position here on the 10th, and so you continue to build that long-term position, you hedge on the way down, you lock in those profits, market goes back up, you're still collecting the dividends, and you're still reaping the benefits of the long-term position. So nice little, I guess, side strategy, separate from the day trading, but just kind of, it's pretty simple. Not a lot to the options side of things, just looking to buy puts kind of on an up day or when the market has bounced, and then cover them when the market sells off. And then the last thing we talked about on Monday about buying the dip, and so just wanted to run through a couple of places where you can look to buy the dip. You can use a long-term trend line. So if we go back to the ES here, you can just draw up a long-term trend line connecting some lows and say, okay, every time the market pulls back to the trend line, that's where I'm going to buy. You could look to buy on a gap up at lows. So when the market gaps up, something like this, we sell off and then we gap up after we've made a little sell off. You could look for a break of the high of the low bar in the pullback. So that's kind of what we had here, where the market pulled back. And then once we broke the high of the 10th, that could be your buy signal. Or you could just buy on the close when the market does put in a hammer like this. Any of these, hammers that the market puts in, you just buy the hammer on the pullback. But just keep it consistent. You don't need to be buying up every week. If you're putting $100 or $500 or whatever amount is a week into your longer term account, and then you just add um, once a month, every couple months, whenever you get your signal, really is all you need to do. So if you have questions about that, you can drop them in the comments below as well. And I hope everyone has a great rest of your week, and I will talk to you all soon.